Hello, welcome to Cash Talks. I am bringing on a guest today that's in the lending world for over 20 years. He's a division president overseeing 10 different states. He's right here in Idaho, in Meridian, Idaho. He's a fantastic lender, wealth and knowledge. Let's bring on Mr. Richard Johnson. All right, so I'm here with Rich Johnson here of Primary Mortgage up here in Idaho. And this is a fantastic, super experienced lender that I've worked with and referred clients to. And he actually has done the loan on my home here in Idaho too. And then, of course, you may have heard me chatting with Dave DeSouza, who is with the same company in Glendale, California. And Dave has done the loan on my house there in Glendale, California. So I love to work with these guys because, yes, they've all got very competitive rates, as most of these people do across the board, but they don't have competitive service. And that's the big difference, right? Service. And to me, that means a lot. And as I've done hundreds and hundreds of transactions through the years, I've learned that the lender plays a very pivotal role in this whole transaction of real estate. Yes, the realtor, super important, but the lender is too. And you've got to have a really good lender that's controlling all the financial setup in the background, right? So I wanted to reach out to Richard here to just kind of bring him in and give us his perspective and thoughts on what's going on in the market right now with interest rates. We're all talking about interest rates. And Rich, how you doing, buddy?
Good. How are you doing, Cash?
Good, man. Thanks for joining us today.
Kind words.
Yeah, of course, pal. Of course, man. So, Rich, what could you tell us, man, about what you're seeing going on? I know the Fed just met a couple of days ago, and we all understand that he didn't do anything with the rates, kind of left it alone, right?
Yeah, that was awesome to see. I mean, we've been lacking good news, and they decided not to raise short-term interest rates, which was good for us. As you know, the bonds have really been rallying out of control, and this kind of put a stall to that, and they started to retreat a little bit. So Wednesday, Thursday, Friday, rates actually went down, and where we were sitting at about 8, we're floating at around 7 5/8, in that range.
7 5/8.
Yeah, depending
nice.
on all of the nuances that we figure in, but we're about 7 5/8.
7 5/8, and that's a substantial difference between where it was.
Difference. We want more, and we want it to continue. Yeah. And as you know, Cash, has been a brutal year for everyone in real estate, all lending, and all realtors, and the banks as well, and credit unions. But we were hoping the spring of 2023 we would have reprieve. That didn't happen. And that caused a lot of lenders like us to take further action and decrease staff. But now there's a lot of talk about Q2 of 2024. We'll see some reprieve. And I'm at the point now where we're living today. And when that does happen, we'll celebrate. And so we're looking now to get really creative with what we offer, our buyers, because they're the ones who are really getting hurt, with these high interest rates.
Right, exactly. And how it really impedes somebody's purchase power every time those rates go up. Now it's gone down a little bit. This could definitely improve some purchase power for some people that might have been right on the fence of being able to afford something, but anything helps to improve the affordability. And I know that I chatted with Dave about this earlier too, and maybe we could touch on this about how people are bringing in different techniques and strategies in the lending world to buy down rates and between short-term and long-term permanent buy downs and vice versa. I was with a client yesterday and we were talking about that. And his question was, well, what's your thought? Should I do a short-term buy down and save some money on that now, or go for the permanent buy down?
Mm-hmm.
What would be your response to that to somebody?
I like them both, and we're doing a lot of each of those. I have 19 branches across the country and different pockets of different states, and all of my loan officers are doing some form of buy down, typically seller funded, but not always.
Right.
The lender can participate, the seller, and of course the buyer can throw money in. But really, I think there's a risk with the short-term buy down is, say, for example, and we use today's rates, if you do a 3-1 buy down and it starts at 4.5, goes to 5.5, 6.5, and ends at 7.5.
Right.
But, you have to be able to structure your life knowing that payment can potentially go up unless you refinance out of it. And so I think that's the risk of a short-term refinance cash, is that you're going to start low, but we're all hoping rates go down to 5.5 or they're around in next year.
Mm-hmm.
If it doesn't, then your rate's going to adjust and adjust and adjust. And that's why some people, especially non-risk takers, like more of a hard fixed permanent buy down.
Right.
Those two can be seller funded. The lender can help. The realtor can help. The buyer can definitely help. And so we're seeing a good mix of both.
Okay. All right. Across the board, huh?
Across the board.
Just depends on your comfort level and how much of a risk taker you are, I guess, right?
Totally up to you. Now, we all think rates are going down, and they should, and they will.
Mm-hmm.
Only the federal government knows when, I think, at this point. We've all speculated. I've listened to a lot of economists, and they've all been wrong.
Yeah.
Right. The rates are going to go down when the federal government makes them go down.
Right. Yeah. I mean, it's really amazing
under control,
how much talk is going on about interest rate speculations and the real estate market itself. Like, I keep hearing the crash is going to happen, and then no, rates are going to come down. And then when that happens, there are so many buyers on the fence and sellers on the fence too, because a lot of them have been frozen with this low interest rates they had, and it's stopping them from going forward with whatever they want to do, their next dream or next adventure with their home. So they're staying put. Because it makes sense. Why would I want to get rid of a 2 3/4 or 3% rate to go to a 7.5 or an 8?
Right.
And then that's even if you can afford it at the new higher prices with the new higher rates. It really makes the affordability factor just really tough. For anybody. Everybody's riding the brink when it comes to that, right? With where they're at with that. So if the rates do go down substantially next spring and summer, which I'm hearing a lot of chatter about that, a lot of talk about that. And then again, on the flip side, I hear people say, no, it's going to stay the same through next year. So it's like they say, a broken clock is right at least twice a day, right? So someone's going to be right.
Yeah, you're right. I've stopped listening to it all because I have 67 employees, and I got on the, I was beating that drum that, hey, this is what we have to look forward to, gang.
Right.
Rates are going to go down in Q2 of 2023. Guys, hang in there. Never happened. And so I had to take a step back and just, hey, you know what? Here's where we're at. Here's the rate we're at. We're all going to hope that rates go down. We don't know when.
Right.
And that's where, again, that gamble comes in on that buy down short term.
Right.
But we should go down. The home buyer today at these sales prices and with these interest rates, it's eliminating 2/3 of them. They just can't afford it.
Yeah.
That needs to be addressed.
Yeah.
Right.
I think the pressure for those, it's not even just will they come down. Now there's a tremendous pressure from a lot of people that need to get into homes that are, these rates have got to come down. They have to. I feel strongly they will. And I think they'll come down to some extent next year. Will it be in February, March, or will it be more in the latter part of the summer as we get closer to the election? A lot of people talk about the election year. That always is interesting, right?
Yeah. Yeah, I think it's interesting that I think it's nice that they didn't raise short-term interest rates. And it was nice to see the bonds stop their rally. It is November. December is going to come pretty quick, and then it's election year.
Right.
And I would think this administration at this juncture needs a Hail Mary.
Mm-hmm. Yes. Yeah. Agreed.
That would be a good thing that the government did, positively for the country, is help these home buyers get in a better position.
Right. We hear so much controversy over what kind of influence they have over the Fed, that sometimes they can or they don't. So that's the $1 million question right there. That's the big mystery for me.
Well, I think every time Powell speaks, the market moves to what he speaks to.
Tremendous power.
I'm talking about long-term interest rates, but rates go up, rates go down every time he speaks, right?
Right.
So I think they got
absolutely.
They got a lot of power.
Crazy power, man. More power than a left hook for Mike Tyson, I'll tell you.
Yeah.
right?
Yeah, for sure.
So short-term buy downs, give us an idea, if you could, roughly, there's a price difference between short-term and the permanent buy downs, because permanent should cost more. You're going to lock that baby in for 30 years, right? But is there kind of a rough number you have, like if somebody can to justify in their mind what makes more sense to go with the short term for now, roll the dice, refinance in 1, 2, or 3 years, or do I just go right now and do the buy down for the permanent, right?
So
What
I'm
would
gonna
we look like in cost on something like that?
Yeah, so no, so what you're doing is it's the same exact thing. The short term and the long term fixed buy down. You're buying down margin, right? You're paying points.
Right.
One of them you're paying hard fixed points to buy the rate down permanently. That becomes a part of your transaction, and here's your rate. Right. Now that's a little bit different than a 3-2-1 buy down where that money's just buying down the rate being set aside for you to bridge the gap on your real rate.
Right.
And so the cost of both are, fairly close because you're buying down margin, but I really like the fixed hard cost buy down that's forever, so there's no question. But I'm
Okay.
54 years old. And, I like a little more stability and know, hey, I'm going to go this route. But for a younger person or, somebody who's going to not be there a long time, maybe a couple, 3 years, or someone who's just likes to roll those dice, the long term or the short term buy down, the 3-2-1 temporary buy down might be the ticket.
So am I hearing that they're really about the same cost, roughly, for a short term? Because then why wouldn't we all go permanent, right?
Yeah, because you're not going to buy down near the rate if you go permanent, right? The buy down it's going to be hard to explain on this video.
Is it? Okay.
But, right. So, and I'm not
Give me your best brief summary, I guess, is,
Yeah.
I understand it's like about 1 point to buy down 0.25% of rate on a permanent, right?
Mhm.
And 1 point being 1% of the loan amount. So if you got a $500,000 loan, that's $5K, right?
Right.
So if I want to bring down a whole point, I'm looking at $20K.
Right.
Does that sound about right, roughly?
Yeah. So that would then take you to 6.5.
Right.
Right.
If I'm at a 7.5. Right.
If you start at 7.5, that would take you to 6.5. That $20,000+.
Gotcha.
So for the 3-2-1 buy down where you start at 4.5%, that may cost, depending on how expensive the home is, that may cost $27,000 to do that. But you're starting at 4.5.
Gotcha.
Move into 5.5, move into 6.5, and the spread differential, they're just socking away an escrow to make payments for you because it's temporary.
Right. Right.
Eventually, you're going to end up at 7.5.
Right. Okay.
So that's why the cost is different for a temporary buy down than a long-term fixed as far as how much you're buying down.
Mm-hmm.
But it's really about your risk threshold.
Right.
Right. What do you want? You want if 6.5 today costs you $20,000, rates are really at 7.5. Are you comfortable with that, or do you want to roll the dice?
Right.
Spread this out and have a lower rate for about the same cost, but it's variable and it'll go up.
Right.
Every year.
Another understanding I have is, regardless of it's short term or permanent, you need to qualify at the prevailing rate. Is that correct?
That's the difference. So what you're talking about, the temporary buy down is temporary. So you gotta qualify at the end rate. The hard fixed buy down is permanent, so you do qualify at that rate.
Right. Gotcha. Yeah. So if you buy that down to 6.5, then obviously that makes sense. So the short term, you've got to qualify for whatever the prevailing rate is at the time.
That's right.
Of course, it'll drop down to maybe 5.5 the first year, 6.5, and then go back to 7.5 if you haven't refied by then. But if it was me,
that's the name of the game, right? That's the name of the game.
Yeah. I mean, I like a solid foundation, a permanent foundation in real estate myself.
Right.
But honestly, with the way I'm seeing things and feeling about things, I would opt myself. If it was me, I'd do the short term right now because I do have a strong feeling rates are coming down next year at some point. It might be the end of next year. It might be I think it's going to be around the middle of next year. That's my thought. But will it come down enough? That's the $1 million question, right? So that's why I'd like that second year to cover me anyways.
Yeah, it's my job to educate the buyer on here's your options. Most of them are going for the temporary buy down. They love that start rate. They love they love knowing how long we've had this high rate environment, and
right.
the likelihood is that rates are going to go down.
Right.
So they love knowing that, and most of them are choosing the temporary buy down.
Right. Okay. The temporary buy down. That's what would you say? Like 3 out of 4 people? That's what they're leaning towards, or what?
Yeah, I would say that's about right. We're almost cash. Almost everyone is doing some form of buy down.
Okay.
Whether it be, okay, here's my rate today. Here's your rate today, 7.875. But for 2 points, you can have 7 and 0.375. 3 points, you can have 7.
Right.
And just so there's some form of buy down coming in on almost every transaction we're seeing.
Question about appraisals. Are you seeing appraisals being more challenged these days, or coming in a lot more these days? Where are you at with that? What are you seeing?
Not yet. Not. I have. I haven't heard. Well, I just think we don't have. The markets really haven't adjusted since their first adjustment. Most of them that I'm in, anyway. And it's pretty stable right now. So not a lot of appraisal challenges today.
Okay. That's where I'm at. I'm not seeing them either.
Yeah, not really.
And that's what I share with people that want to buy, but they don't want to pay the high interest rate. So we talk short-term buy down. Right. But it does need to appraise when we get the seller to go ahead, sometimes maybe even come above their sales price to incorporate that buy down rate in there, right? Instead of beating them up on lowering that price right now. Unless they're really overpriced and the house is sitting on the market, then we could do both. We could get them to lower the purchase price, and we could get them to offer a credit to my buyer. That could always happen.
Yeah, we're seeing all kinds, right? We're seeing all kinds of stuff coming in. And you're 100% right. It just depends how long has the house been on the market, how aggressive do they want to be? Because what I do with the buyers who want the temporary buy down, I'll give them, here's your snapshot. Here's how much you got to ask for. Maybe they meet you in the middle. Maybe use some of your own cash. Right. Maybe I throw some in. Let's try to make it work for everyone because I want you to have that low interest rate to start. It's very comfortable with.
Okay. Yeah. Perfect.
So it's coming out of everywhere, and I'm seeing all kinds of different, structured transactions.
Yeah.
When it comes to buy down, because we want what's best for your buyer.
Right. Exactly.
Right? Let's look at this. Let's chop this up every which way and see, what you can accomplish with your realtor.
And this is one of the many values of a good lender is that they get these things figured out because nothing is one way. Everything is customized for every buyer across the board. And we got to show you the options, or not me, but a guy like Rich does, or Dave, and then show you the options and then see what we can work to make things happen for you. And it really boils down a lot of times to that monthly cost. What are we going to look at? And
that's just that it's rate for these guys because rates are so high.
Right.
So how do we get that lowered either with a fixed buy down or a temporary buy down?
Right. Exactly.
And once you explain, the differences, they're very, very different.
Right.
Right. One's going to be maybe you buy down your rate for 1.25%. And it costs you as much as the temporary buy down, but it's permanent.
Right.
Right. So let's look at this. Let's look at that. And these are the loans that we've been doing a lot of lately. And now the bond agencies are getting on board with them. They're always a little late to follow.
Late to the party.
They're also offering buy downs now, which is awesome. Because if you don't have much of a down payment, we'll plug into bond loan and use their buy down. It works the same way.
Right. Okay.
Yep.
Got you. So I've been at this game professionally full time for 16 years, and I know you've been in it longer than that.
Yeah.
And so, I mean,
Over 20,
collectively,
I know, it's crazy.
right? We've seen some stuff, right? Some between the crash last in 2007 and 8 to this market today, and the amount of sales, the amount of closed transactions in real estate is very close to the amount we had back in '08 right now, which was really low then. And we're right at that around that same number right now. So transactions are slower, but prices have been holding pretty stable across the board. They've had their fluctuations, in different parts of the country, even different markets in your particular area. But it just is very relative to, because you also see a lot of people overpricing. In the beginning, we saw a lot of price reductions coming down, right? Oh my God, everyone's reducing price. Well, does that mean the market's coming down, or does that mean that seller's price is coming down because they priced it too high in the beginning?
Right.
A lot of people were still stuck in 2021. And if they had a really good real estate agent on helping them to come up with this pricing strategy, they probably wouldn't do something like that. Then they had to come down with price reduction. So that happens. It's natural. And then sometimes we just don't even see what the market's doing because we've been so volatile. We've been in a really crazy, volatile real estate market, lending world, economy, the world, So we're all having to stay, light on our feet and toes, moving around, keep working that jab, right?
Right.
you gotta stay loose, But there's tools to use.
Yeah, staying loose. I want some action, and I want to win for the buyers. I want a win for the customers. It's been over a year. It's been a year and a half.
What's been a year and a half?
High interest rates.
High interest rates. Okay.
No refinance activity. Very little refinances, and if you do, it's a detrimental refinance, possibly a divorce, or I need cash out. I can't live. I can't high credit card usage. It's not something like, oh, I just want to build a deck out back and rates are smoking, so why wouldn't I?
Right.
I want to get back to that type of offering for our customers because it's really been a long time.
Yeah, right. Are you seeing any activity in foreclosures and distressed properties? Anything that's alarming?
Very little.
Very little.
Yeah.
When you say very little, what's unusual or something more above the normal? Because there's always distressed properties, no matter what market we're in.
I think they're topped out, Cash. I think they're topped out. I think that, if you're using credit cards and you're thinking, that maybe you can refinance later and you started doing that a year and a half ago, and here you are today and you can't refinance and pay off those credit cards, you're in trouble. So I think people are, unfortunately, they can't afford to live on what they make and they're using debt, and it's crippling them, and they're, they have no choice but to walk away. Or, what also is happening, and it's more in the financial industry, but people are losing their jobs. Right. If your spouse, contributed half of the money coming in, and that's gone, there's another reason to foreclose. Yeah. But not a lot of activity there, but a smidgen here and there. But it's mostly debt related, at least from what we service.
I've had a client or two of mine in the last year or so, talk about they're just ready to walk away from their house, hadn't made payments in a long time, right? Didn't even want to open the mail. Wow. So I'm like, 6 months have gone by, and this to the point where they're just like, they're overwhelmed, stressed, depressed, all the above, and ready to say, here, just take it back, whatever. And I said, listen, no, there's things that can be done and worked out. And they made the call finally after a couple of convincing, calls. Finally, they made the call to the bank and the investors, and they worked it out. They worked it out. They didn't take their house. They didn't foreclose on them. And I've seen a lot of that going on these days where banks will work with people. No guarantees all the time. Right?
It'll be a different experience now than it was in 08. 07, 08, 09, when it just exploded. They weren't ready, but now they have, a lot of best practices in place. And I'm talking about everyone who services loans. They're going to be able to deal with, the fallout a little differently this time and really help the consumer.
Right. Gotcha. And that's my point exactly. So if you're out there and you're having any questions or issues of any sort, call your agents.
Yeah.
And call your lender and talk to both of them and kind of see what options are available out there. Because it's constantly changing, evolving, and you just don't know what's available at that time. But there might be something perfect for you, but we'll find out. Okay. Because the last thing we want you to do is lose your home and lose your equity. Because there's a lot of people with equity today, tremendous equity. Matter of fact, a comforting thought to share with a lot of people is that in our country, our amazing country of the United States of America, we now currently have 40% of all homes are mortgage free. They're owned completely mortgage free. It's tremendous number.
Awesome.
And then the remaining balance, there are a lot of people that owe less than half of the balance on their house. So we have a strong position of home ownership right now in this country. So that's why I don't, when I see these people come on talking about everything crashing and burning and it's all over, and
I don't think so.
I just don't see that, Anything could happen, right? Anytime. Right. There's always that wrench, but right?
Anything could happen, but there's definitely going to be, we just don't have inventory. And I'm in 8 different states, all with the same problem. Lack of inventory.
All with the same problem. 8 states. How about that?
Inventory, right? So something's going to give, but I don't necessarily think it will tank every state when the market comes back in line. I just don't think that's going to happen. I think it's, it'll impact maybe some states a little bit, but people are still moving to most of the states that I'm in, at least. And that, they're moving there, and that drives prices, right? So I don't know. I just don't see a big crash like everybody's talking about. And quite frankly, I don't believe anything I hear anymore.
Right.
They've been wrong about this, the inflation. Yeah. They've been wrong about rates. They're wrong about everything, but everyone has an opinion.
Yes.
And I hear it all the time. I'm like, yeah, you don't know, because I don't know. And you don't know. No one knows. But I hope for the customer, for both the seller and the buyer, wherever we land, we land. We just need rates to come back in line.
Absolutely. So one thing I could share, in my opinion, what I've learned is when you're looking at all the YouTube channels and all the media out there, the number one thing that sells and gets your attention, that hook, is fear. And that's what everybody wants to get you hooked in with, fear. And half of those horrible, scary headlines you hear, once you start reading the story, they change their mind. They just want to hook you in. And then, well, it's not so bad after all. So don't just read the headlines. You got to dig deep into these conversations and multiple, forms of communication and media, so you could, make the best judgment call on that.
I bought my home. I bought this big old house that I don't need any more cash in 2008. And I paid top dollar for it. I'm sorry. No, it was 2007 or right before the crash.
Okay. 2007.
Top dollar.
Yeah.
It was perfect for my family, and I still had kids, and we were raising kids and everything like that. Well, a year after I bought it, or a year and a half after I bought it, I lost half of the value. Just like that. Boom.
Yep.
Purchase price of $400,000. Now it's worth $200,000. And my wife kept asking me, "Hey, Rich, what are we going to do?"
Right.
And I said, "Nothing. We're not selling it."
Yeah.
You don't lose until you sell.
Right. Exactly.
I'm not going to sell.
That's it.
So here we are in the same house, 2023, and now it's worth probably at least 2 times what I paid for it.
Right.
Right. Yep. You lose when you sell real estate. You don't lose if you retain it.
Exactly. 100%.
So if you lose, even if this crash happens, but everybody's talking, we're going to major crash in Idaho. It's coming.
Yeah.
I hear that in Nevada too. It's coming in Iowa too. It's coming in
California, New York,
California, and everywhere.
Yeah.
It could happen, I guess. But even if it happens, write it out.
If you own a property and you could afford it, you just write it out. That's what you do. You hop on that and write it out. Yeah. Absolutely. Even in New York, maybe a lot of you know the real estate agent, Barbara Corcoran. She's on Shark Tank a lot, right? This lady's an amazing agent, sells $1 bazillion worth of real estate all the time. And she's come on social media saying she feels rates are coming down next year. Super adamant about this. Rates are coming down, folks. And when that happens, there's so many buyers are going to be jumping off that fence prices are coming up. This is what Barbara Corcoran says.
That's
Bring it online, you'll hear it.
Both ways.
Sorry?
You get it both ways, right? Right. Oh, the market's going to crash on one hand, and somebody else will say, "Oh, I disagree." Right? It's much like the media today. In every arena that we live in, they're guessing.
Yep.
Nothing's factual.
Well, they're going on the same philosophy I mentioned earlier. Even a broken clock is right twice a day, right?
You're right.
So you roll the dice and see if you're going to be right or wrong, what's happening,
So today our job is to educate the consumers, just overload them with options and education so they can make a good decision for their family. That's your job.
And Rich, why guys like us want to just say, this could happen, that could happen. This is what I believe or feel might happen, but I'm not sure. These are the people that are going to be around for a long time in business. The people that tell you and sell you on fear and these kind of things, these kind of people you don't really see around a long time. They disappear later. Get
them out of your life, man.
Get them out of your life. That's right.
Here's the rate. Here's our options today. Do what's best for your family.
Exactly.
Hey, Rich, you think we'll be able to refinance in a year? I hope so. I do, but it might be 2 years. It might be a half a year. I mean, I don't know, and you don't know. So do whatever is best for your family, and that's where these buy downs are coming in, right? They're creating opportunities. One's a fixed hard buy down, and that's probably better for the non-risk taker, and then the variable temporary buy down is good for somebody who's willing to take a chance.
Right. Okay. I saw your bodyguard peeking in on you back there.
Is there one? What's up? I'm babysitting.
That's a celebrity visit, folks.
Yeah, that's right. Richard Junior Johnson.
Guest appearance.
There we go. That's right.
Sorry.
All right. Well, Rich, it was great talking to you, man. Thanks for sharing all this awesome information. I'm sure it'll help a lot of people make decisions one way or the other. But again, they could always call you or email you. We'll make sure your information is available too for primary mortgage. And have a great rest of the weekend, man. I hope we get together real soon and talk soon and talk to each other.
Thank you, and thanks for being an awesome agent, buddy. You're the best, and I appreciate working with you. And we're gonna get out the other side of this. I have a lot of folks that I do talk to that are more realistic with their thought process, and they're thinking sometime next year there'll be some reprieve, and those folks, I believe, because they're not on the news, they're not trying to make money off of propaganda and false statements. They're friends, and they do their due diligence. Next year we come out the other side of this, I think a lot of people will be jumping.
Right.